Hey, welcome back to Two Super Guys Red Sox. I'm Dylan.
And I'm Vinny. And holy crap, it was an absolute bloodbath. Walgreens this week. We're going to take a look at the quarterly report and decide whether or not this would be a Michael Burry deep value stock or something to run the hell away from. We'll get to it. All right.
It is important
So, what's
to
up?
note if you look at Walgreens right now, every single article unbelievably negative, right? Now, once there are positive articles, the turnaround has already happened. We saw that with
Yeah.
Meta when it was at 90. All the articles are like, nah, I was going to 50. This is the worst stock ever, right? So is this worth investing in? Because this is getting hit hella hard, so
Yeah.
bad.
Absolutely. Hence the falling knife here, like on the stock chart. This is their reaction to the earnings report this week,
Yeah,
which is just absolute insanity
it was bad
for like a
earnings.
company that's a household name, arguably.
Yeah.
Down 24% in 5 days. Okay. So 24% 5 days, pretty brutal sell off, and a company that already was facing some pretty significant headwinds from a stock price perspective.
Yes.
It is rare to look at a 5 year chart of a stock and see it being down 77% over 5 years.
Yes. Absolutely crazy, especially with the COVID run up. Doesn't make any sense. Well, it does
Yeah.
make sense, but it
Yeah.
just doesn't happen often.
Just let that sink in for a second. This company is down 77% over 5 years. I mean, SPACs can pull that off in probably like 6 months, but outside of that, there's not a lot of companies out there you see with that sort of bleed off in their stock price. So which makes us like question like, is this that kind of late 2022, October of 2022 position for Meta stock? Remember we were buying at that point, very fortunately, and caught this massive like bull resurgence here when people realized that all the negative news about Meta was inappropriate. We're going to see if it's justified in the case of Walgreens Boot Alliance, right? So I think you had a 20-year chart here.
Yeah. So 77% over 5 years. But in 2015, they were at almost $100 a share. They're almost down 90%. They're just
Yeah,
shy. It's like 87% in 10 years. And then at the 20-year mark, they're showing around $30.
pretty
Oof.
crazy. That is quite a prolific sell-off. So one of the stories that I wanted to touch on, basically, read through like the Wikipedia page about Walgreens Boots Alliance to get a little bit of their history, and one of the things that came up that's another potential issue for them that I thought should be highlighted is the opioid lawsuits. We saw a rejection of the Purdue Pharma Sackler kind of settlement this week by the Supreme Court of the United States. So this is still in pretty much an ongoing area of legislation. I can't speak to the individual like kind of exposure here with Walgreens Boots Alliance. There is a kind of mention of it in the quarterly report, but it's something that is you would have to have some degree of competence and knowledge in this arena, I think, to accurately assess the risk to Walgreens. Do you
Right.
agree?
Yeah. Also, this was real shitty. I like I'm Purdue Pharma should have been. Yeah, I'm not gonna go there.
Well, they still may get their day now. There's been rejected the settlement there, but this is still ongoing. 2021 here. Okay, that's not that long ago, and these are cases that take quite a significant period of time to ultimately resolve. And there's only two states mentioned in that little blurb there.
Right.
So two out of the 40, 50, at least 48 that still have unresolved issues. But these are some of the things that might attract you to Walgreens when you look at it. This is from CNBC. This is the quick kind of highlight financial metrics here. You know, CNBC has given you a dividend yield of 8% on Walgreens, which is absolutely bonkers. I can't tell you if that's actually accurate, but it's something that would attract your attention if you're someone that's interested in cash flow investing. We're going to look at the cash flow for the company itself here in a minute, though. All
Okay.
right. Forward PE calculated at 4.4.
I mean
Like,
that's fantastic. However, I believe this last quarter they lost a shit ton. Right.
well, they were profitable, kind of. Yeah, exactly. We'll look at the numbers here. Um, so this is their highlights. All right. So they're saying that the third quarter EPS was 40 cents compared to 14 cents a year ago. So that would be a positive improvement if you're
Solid.
comparing it year over year, right? When they look at the adjusted EPS, it's down 36% year over year. Walgreens, by reading through their kind of quarterly filing here compared to any other company I've read, it seems like they have a lot more adjustments. They're moving the numbers a lot based upon their adjustments. So you really need to read their quarter report very with a fine tooth comb in order to be able to accurately assess what the numbers should be. That's
Okay.
something I picked up on.
I don't like
All
that.
right. So they talked about the kind of challenging environment for pharmacy chains. Not surprising there. CVS has been under the well, kind of weather for a little while here as well. Um, they did actually have a net revenue increase, 2.6% top of the line. So they are growing. Their revenue is still positive. This is something that they got probably really hammered on here. We're going to talk about the comparison to previous expectations, but they decreased their EPS guidance for this year. All right. And you notice once again, it's their adjusted EPS guidance. All right? They're adjusting everything under the sun. When you look at where the rubber meets the road, when you get to cash flow, it's not nearly as pretty. But this is what they were calling for as an adjusted EPS now after this quarterly filing. Right? The other thing that came up quite a bit, this is a little comment based upon management's position, where they said 100% of their profits are coming from 75% of their stores, and they're kind of looking at efficiency from the operation standpoint. And that's something you're going to see, is that they have a significant number of stores that are going to need to be shed to actually have this become a more profitable company, or actually maintain profitability, but decrease their overhead by shedding 25% of their stores conceivably. Crazy, right?
So I think it depends on where you live, right? Because I'm more in the city than you, and I will say there's definitely some Walgreens that should close. There's some that are like two or three, like within a mile of each other. It just doesn't make any sense. So
Yeah.
I just, I kind of agree. If your 75% is making all the revenue, just cut the 25%. You're going to lower your overhead quite a bit.
Yes. In the longer run, that is definitely the right idea. The issue they're going to struggle with is that it's cost inefficient in the short term in order to make those adjustments, right? Because they have cost associated with closing down these stores and breaking leases and those sort of things.
True.
Um, Another, I'll talk about it here in a second. We'll see. It's another strategy they've been employing here. All right, impacted by challenging pharmacy trends and a worse than expected consumer environment. This is not their fault in
No.
particular. This is U.S. macroeconomic issues with consumer spending are starting to really kind of feel the pain of the interest rate hikes. You see every one of our other videos basically on Earth. And the pharmacy world in particular is very challenged right now, because you have startups like you have Amazon coming into the pharmaceutical space. You have that Mark Cuban startup.
The
It's a
cubes.
area that is being disrupted actively, right?
Yes. Well, I also don't feel bad for that because, man, so I prescribe, a lot of medication. I'm in dermatology. Sometimes people are like, "Hey, man, that medication was $200." I'm like, "Fuck, just use GoodRx. It's $8." Like, it's
Yeah,
crazy. It's now.
yeah,
Granted, that's not directly their fault. That's also insurance. So
yeah. It is definitely an industry that preys upon ignorance,
yes,
where and it makes your life more complicated in that certain products may be more cost effective at different locations, rather than having it all under one tree. You have to like mix and match to get the kind of best deal for yourself if you're really kind of focused on getting the best overall price on your medications. But it's neither here nor there, I guess. So they are kind of trying to save some cost here, and $1 billion in cost savings this year. This is that new kind of EPS guidance here. All right, don't forget adjusted EPS of this 280 to 295. Previously, there was 320 to 335. So that's a 12% decrease in EPS, adjusted EPS from the prediction, and that was as of last quarter. So that's how much their business degraded in 3 months, which is why the stock got absolutely obliterated.
so okay, that fair. But like you said, the macroeconomic environment has drastically changed. Unemployment's going up more and more. But now, granted, it's not changed this bad. Just to
Yeah,
be very clear, it's slightly worse. It's not 12% worse, but
no,
maybe they're ahead of the curve on being
yeah.
bad.
Okay. You could definitely argue that their consumer base is less resilient financially than other companies, right? We've seen this where, you know, uh,
Like
Walmart had a
Walmart.
better quarter because of attracting higher income kind of
Exactly.
consumers, which makes sense. I don't think Walgreens has that same
No.
panache, if you will. So this is actually we're looking at some of their financial highlights here. If you notice, first of all, lots of bracketed numbers here, right? So those are all negative numbers, right? Year to date, 2024. So on a GAAP basis, all right, down 13 billion, and then
Okay.
on an operating, and then on a net earnings basis, 5.6 billion. And when we talk about GAAP adjusted earnings here, you get a negative 6.53 versus their adjusted a positive 2.49. So how do you feel about their adjustments, seeing
Wow.
how wide
How
that
does
spread
that?
is?
Wait. How does that work? How do you go from That doesn't even make any sense.
Well, there's these one-time charges down here, right? So a net loss of $5.8 billion non-cash impairment charge on, I believe, the Village MD, goodwill. Basically, when you write down the goodwill on a purchase, as a sub-unit here of Village MD, you're basically saying we paid too much for it. It's no longer worth what we paid for it. Therefore, we have to decrease the valuation we carry on that goodwill on our balance sheet. So they're basically saying they overspent by almost $6 billion on goodwill on the
Great.
purchase of Village MD. Additionally, here this is where that little bit of opioid kind of lawsuit comes into play. $5.5 billion charge related to opioid related claims and lawsuits. Yeah. So
Oh,
yeah, I
man.
mean they're loading the boat a little bit on these significant expenses now, but you have to make a well-educated decision on whether or not these are truly one-time expenses or if these have the potential to be an ongoing issue for Walgreens. And I don't know. You'd have to look into like the Walgreens kind of opioid related claims here and see if there's something where it's one and done, or if they can continue to have payments related to this. I think they mentioned legal fees in particular related to that,
Man.
but
We need a
yeah,
lawyer
expensive.
YouTube guy to answer that question.
Yeah, there's a lot to it. But anytime I see a business that's having this much of a spread between, their reported EPS, their adjusted
Yeah.
EPS, and their gap, like you sleep so great at night. And particularly, the kind of investing I like to do. What do I
Cash
really care
flow.
about?
Cash
Cash flow,
flow,
right?
baby.
If you notice, Meta never really had that problem. All right,
Mm-mm.
they had a significant decrease in their revenue growth, and then they also had significant decrease in their EPS, but they were still getting cash flow in the door. Does that look like that's the case here? Nope, nope. They're still looking at negative operating cash flow, spending capital X. They're also doing the Nikola strategy. I don't know if you know this of leasing back their buildings, where they're selling their properties and then leasing them from the people that
Okay.
they sell them to.
All right.
Um,
Man, you should have led with that. That's the
yeah,
stupidest. That's yeah. Okay, well, you know what? It makes sense. Their 10-year chart looks like Nikola, almost to the T, right? Nikola was at 95, now they're at, 79 cents, then split to 10. So it's actually pretty
yeah.
close. That
You'd
makes
have to
sense.
compress it a little bit,
Man.
but not terribly far off. To me, when you start leasing back buildings, it basically says that I'm going to go ahead and start burning my furniture for heat, so I don't freeze to
Yeah.
death in the cold. It's not a great sign that you're doing well long term financially. So, my conclusion from this is not even worth doing a deeper dive into, and I am going to stay the
Damn.
hell away from this, despite seeing that 25% decrease in a household name in a week. It's just not even close to exciting me.
So, okay, this is a bummer, right? Because I had seen this and I was out of town this weekend. So I was like, Vinny, you got to take a look at this because I think I hadn't didn't get to do any research. I was on vacation. This sucks. Um, those are not good numbers. I think Paul from Everything Money was in this, right? What wasn't he
Oh yeah.
promoting this? I feel like he was like 6 months
He may
ago.
have. I know Jeremy from Financial Education was in Walgreens at one point in time with a seven-figure position. He's the good dude with
Well,
the stupid hat and says like the
jeez.
scary stock market must.
The problem is there's so many media outlets that will just kind of copy and paste each other's articles or change them a little bit. And the negative sentiment on this stock is crazy. So you always think, all right, this could be a diamond in the rough, right? Maybe there's a
Mhm.
5-year hold. Those numbers suck. That is
Yeah,
terrifying. This is not worth it. I need to look at
yeah,
CVS. Maybe CVS is better because CVS is getting just hit really hard too.
yeah. CVS, the numbers aren't quite as abysmal, but you still have a lot of industry headwinds that you have to be able to sort out before you can really decide whether or not it's worth it at this particular price. Burry has
Man.
owned CVS, actually sold out of it last quarter on his 13F filing. I don't know if he ever owned Walgreens. I don't think he did, but he
I
has
don't think he
owned
did.
CVS occasionally. Yeah.
All right. Maybe we should take a look at CVS. Okay. This stock sucks. Never mind.
Yep. That's the next one.